Sachin Dada, can you hear me? Sorry for the delay. We will start the session in 5 minutes.
हॅलो सागर, आवाज येतोय का बघ? येतोय ना?
येतोय, आवाज येतोय.
हॅलो हॅलो
हॅलो,
जीवन किती वाजता चालू करायचंय?
We can start now.
Sachin sir, please start.
जीवन सर, हॅलो हॅलो.
Yes, you're audible.
आय एम ऑडिबल ना?
Yes, yes, yes.
My dear friends, welcome to our class, which is organized by Mumbai Insurance Institute along with Bharatiya Bima Karmachari Sena. Myself, Sachin Loke. I am the coordinator of this class, and I am very much thankful to all the sirs, those who are conducting classes like Yogesh Wadhwa ji, then Kaustubh Kulkarni ji, Anil Jadhav, and Anil Jadhav and Prasad Sakharkar, all the sirs, and even I would like to specially say thanks to Mr. Yogesh Janolekar, who is not here now because of some his health issues, but he is contributing well, and we need to praise him and we need to bless him that he is going to face a short surgery in a near future. So I'm very much thankful to him also, because this time due to his health condition, he was not able to deliver the lecture. Further, I would like to thank Mr. Kaustubh Kulkarni sir, who is the divisional manager in Chembur Divisional Office, New India Assurance Company Limited. Friends, we are conducting these classes since last 40 years. Due to COVID, we have started this lectures online, and this benefit has been exploited by most of the all India people now, all India aspirants. Earlier, we had conducted this lecture offline in Mumbai, like in MRO4 or head office canteen, and that benefit has been taken by only Mumbai people. Now, due to COVID, we started these classes online, and we are happy that our YouTube channel also very subscribed by more than 2,500 aspirants, and our views for each lecture is more than 9,000 views. So this is really going to benefit all the aspirants for the exams, which is going to conduct on 5th of October. On behalf of Mumbai Insurance Institute, I would like to say all the best to all the aspirants. And further, I would like to invite our Kaustubh sir to take over this lecture. Thank you very much.
Thank you, Sachin.
So you can share the PPT now.
Good evening, friends. Am I audible to all?
Yes, sir.
Yes.
Okay. My PPT is shared for all of you. Is it visible to all of you?
Yes, sir.
Yes, sir. Yes, sir.
Okay. Before starting of our 2 days lecture on miscellaneous insurance, I would like to give all the best wishes to all the participants who are appearing for this 13.2 examination. You are the future scale 6 general managers and chairman of our company. So I wish personally and on behalf of Bharatiya Bima Karmachari Sena and Mumbai Insurance Institute, wish all the best for all the participants. Do your best and please be concentrate while giving your examination. So we'll start our today's lecture on miscellaneous insurance. As you all know, there are 3 major types of general insurance. You must be aware that there are 3 major types. First is fire insurance. You have come across that. You have come across marine insurance, and the third, the most vast program or most vast general insurance products are in miscellaneous insurance. That starts right from motor, health, miscellaneous, personal accident to liability. So all these type of insurance products are covered in miscellaneous insurance. So when you are coming across fire insurance, when you are coming across marine insurance, these are products which are related to certain programs which are designated for the particular department. But when you are coming across miscellaneous insurance, the products are very much in larger capacity, larger number. When we say that we are dealing with the products more than 200, so out of those 200 products, more than 90% products are under miscellaneous insurance. So we'll start today with miscellaneous insurance. There are certain products which can be seen on your screen. Those are personal accident, burglary, money, shopkeeper, householders, fidelity guarantee, bankers indemnity and jewelers block, pedal cycles, plate glass, neon sign, health insurance, overseas mediclaim policy. As health insurance is also part of miscellaneous insurance, naturally overseas mediclaim policy is also part of our miscellaneous insurance. So these are certain numbers which I will be elaborating to you as per your exam point of view. In miscellaneous insurance, we'll first deal with personal accident insurance, because when you are giving examination, out of 100 marks, you have to there is 120 questions will be there, 100 questions you will be solving out of that. Miscellaneous also one of the major part. So we'll start with personal accident insurance. What is personal accident? The definitions are very important to understand the subject, basically, because in our day-to-day office working, we generally need not taken into consideration, or we need not understand the meanings and what are the definitions. But while giving the examination, the definitions as well as those nomenclatures are very important. So personal accident insurance, the policy covers any bodily injury, death resulting solely and directly from accident causing by external, violent and visible means. Please note, these are the three important words which you need to understand. External. So all the external factors are to be taken into account when there is any accident, as well as it should be violent and visible. So any person can see the accident has taken place. So the external, violent and visible means are very important. This is very important phrase to ascertain the accident. And not aggravated by bodily defects or infirmities. That is, if a person is having earlier any of the defects or infirmities on his own or on her own, and if those are aggravated due to the accident, so those aggravations will not be covered. So this is very important. External, violent and visible means. So this is a personal accident definition, that bodily injury or death, it should result solely and directly. So the proximate cause, the direct cause should be the accident. And what is accident? Accident is external, violent and visible means. Second one, although there may not be any loss of earning capacity, there still can be disablement under the policy. That will deal in our next slide. Fixed benefit policy, not policies of strict indemnity. You are all aware that all the general insurance products, the general insurance policies are abide by the principle of indemnity. What do you mean by indemnity? To put the person in the same phase or in the same state when he was before the loss. So his indemnity is protected. He should not be benefited, neither he should be deprived of any of his earnings or any of his losses. So this is a importance of indemnity, which we are dealing in all the general insurance product. But yes, the deviation is here in personal accident policy. What is deviation? Our personal accident policy is called as fixed benefit policy. So this is not indemnity policy. This is not strictly indemnity policy, but this is fixed benefit policy. What are the fixed benefits and how that can be ascertained, how you can arrive at the sum insured, that will deal in our next PPT. That is next slide. First, we'll go through the coverages. What are the coverages? In personal accident insurance policy, when we have already stated that the death or bodily injury should occur due to accident. Then what are the compensation or what are the compensation percentage which are payable in case of accident to a person? These are, first, due to death, 100% compensation is payable. That is, if a person is having a policy of say 1 lakh, 1 lakh total amount will be payable to the nominee, the assignee. The nominee is payable the total of the sum insured. In case of loss of 2 limbs or 2 eyes, see here, if there is loss of 2 limbs or 2 eyes or 1 limb and 1 eye, see the compensation payable is 100% if there is resultant loss of 2 limbs or 2 eyes. Or it may happen that 1 limb and 1 eye in the same accident, if it is lost, then 100% compensation or 100% of the sum insured is payable. Loss of 1 limb or 1 eye. The third benefit or third coverage is loss of 1 limb or 1 eye. 50% of the sum insured is payable. So 50% of sum insured if there is a loss, a permanent loss. This is when we are stating loss, it should be a permanent loss. Loss of one limb or one eye, 50% of the sum insured is payable. Now here in this case, they may not ask you this type of question, but in case of death, the amount goes to the nominee. But in case of all other benefits, the coverages, the claim payable goes to the insured only. That is in whose name the policy is issued. Permanent total disablement, yes, 100% sum insured is payable. So here there is a difference. In case of death, the sum insured payable is 100%, as well as in case of permanent total disablement, the amount payable is whole of the sum insured, total sum insured. But the difference is in between the claim payment or claim paying person. When there is a death, the amount is paid to the nominee. Whereas in case of permanent total disablement, the person is still alive, the amount will go to the person, that is the insured. So this is very important thing to note. In case of permanent partial disablement, what is permanent partial disablement? The disablement is partial type, but it is permanent. See, for example, if due to accident, 4 fingers are cut, or maybe a thumb is cut, and it is not in use for whole of the life of that insured person, then in this case the disablement is partial, because it has there is a loss of some part, some organ of the body, but it is in permanent nature, so there is no revival. So there is it is not temporary thing, but it is permanent. So whenever there is a loss of any organ due to accident, it may happen that the maybe one of the ear may be lost due to accident. So this is apart from loss of limb and eye. These permanent partial disablement, the percentage which are shown in the table of the policy, are apart from the limbs and eye. Whatever are the organs which are lost, those are given percentage wise compensation of the sum insured. So this is permanent partial disablement. So the disablement is partial in the nature, but it is permanent. The last one, and most of the claims generally come of this nature, is temporary total disablement. Now please try to understand the difference between the 5th coverage and the 6th coverage. What we understand from the 5th coverage, it is permanent partial disablement. So the disablement due to accident is partial in nature, but it is permanent. So what do you mean by permanent? Then that particular, if the thumb is lost in accident, that thumb is now cannot be used for whole of the life for that insured person. But it is partial. Why it is partial? Partial because the whole of the hand or whole of the limb is not lost. Only one thumb out of 5 fingers is lost. So this is permanent partial disablement. Then what is temporary but total disablement? See, I will give you one example. This is a classic example which generally you might be dealing in your office claims procedure. Many of the times the accident will result into the fractures. Maybe fracture to the right hand, left hand, or maybe the legs are fractured. So in that case, that person, that insured person, is totally disabled. He is totally disabled for certain period. He is totally disabled for certain period. So the nomenclature or the coverage is mentioned as temporary, because that disablement due to fracture of, say, right hand is totally in nature, that the right hand cannot be used totally by that insured person for temporary period. So that temporary period is that we will call or we are giving the compensation on weekly compensation benefit, but that particular disablement period is of temporary in nature. So the coverage is temporary but total disablement, because that right hand which is fractured due to accident is not in use totally for a temporary period. So this is a basic difference between permanent partial disablement and temporary total disablement. Now, what are the compensation which are payable in temporary total disablement? These are weekly compensation at the rate of 1% of capital sum insured, subject to maximum 104 weeks. What are 104 weeks? That is 2 years. We may treat it as 2 years. How would we calculate this type of compensation? I will just give you a brief idea. Suppose if the sum insured is 1 lakh, if that insured person has taken sum insured of 1 lakh under table A, you are knowing the tables A, B, C, D, that will also come across. Then in that 1 lakh, what is the weekly compensation payable? It is 1% of that sum insured. So 1000 rupees is weekly compensation payable to that particular insured person. Suppose due to fracture, the person is unable to go to the office or on his work, he is deprived of his wages. He is not getting the salary, or he is not getting the amount or remuneration. So in that case, the weekly compensation payable from the insurance company is 1% of capital sum insured. That is 1000 rupees per week. Say for example, if that person has not attending his duties for 6 weeks, the amount of compensation payable to that insured person is 6000 rupees, because since he has not attended the office for 6 weeks, and our weekly compensation benefit is 1% of sum insured, for 6 weeks it will be 1000 into 6, that is 6000 rupees. So this is a simple nature of claim payment in case of temporary total disablement. There are many questions arising in your mind that though he is not attending the duties, he may be having a sick leave certificate, he may be having the leaves balance with that particular person, still he is giving those sick leave, otherwise he would have used those sick leave for other of his illness. So those sick leaves are also part of loss of remuneration to that particular insured person. So these are weekly compensation payable to the insured person in case of temporary total disablement. Also, there are many thoughts and there are many questions comes at the time of claim, that suppose a businessman has this type of fractures, he is not attending his duties, but still his shop or his trade is running, is in good running condition, how there will be a loss. In our earlier slide, we have come across that this is a fixed benefit policy. Once you have issued a policy and you are confirming that the fracture is there or temporary total disablement is there, you have to give the claim of weekly compensation to that particular insured person at the rate 1% of capital sum insured, because these are not strict policies of indemnity, that you must understand. Special features, these are also very important. Our personal accident policy is 24 hours. It is not restricted for say 10 to 5 or during office hours or after office hours. It is basically covered for 24 hours. Again, this policy is on a worldwide basis. Once you have issued a policy of personal accident, if there is any accident out of India, then whether the claim is payable or not, yes, the claim is payable, because this is a worldwide cover policy. So these are special features. No add-on premiums are taken. This is covered for 24 hours and it is on a worldwide basis. Travel as a passenger in a licensed standard type of aircraft is automatically covered. So these are some of the special features. When you are boarding as a passenger in an aircraft, you are automatically covered. No need to have a separate insurance policy if you are traveling by aircraft. Medical expenses, yes, on payment of extra premium, that is 20% of the extra premium, the medical expenses are payable. When the term, for all of you, you need to understand the difference between the medical expenses and the hospitalization expenses. What are the medical expenses? Medical expenses are those expenses which are attributed to or which are required in case of any of the accidental injury, which does not require hospitalization also. So it may happen that the expenses incurred by that insured person will be for the accidental injuries, but for that person is not hospitalized in any hospital, still he is incurring some expenses. So these are termed as medical expenses. So if those are not hospitalization expenses, still those are payable. If those are hospitalization expenses, those are also payable. It doesn't mean medical expenses means hospitalization expenses, as well as the expenses which are not hospitalization but are related to the accident injury are termed as medical expenses. These are payable on payment of extra premium. So this is add-on cover. By paying 20% of extra premium, these medical expenses are payable. War and allied risk. See, war in our any of the general insurance policy, war and allied risk, the nuclear weapons and all those risks are not covered at all. But here, they in special features, I have elaborated very important point. Working in foreign countries on civilian duties can be covered at 150/250% loading on premium. So if the insured person, the Indian insured person, when he is working in foreign country on civilian duties, by payment of additional loading, the 150% or 250%, these war risk can be covered. So if there is any accidental death or disablement due to war, and if those are in foreign countries, working in foreign countries on civilian duties, then those will be covered. But this is again add-on covered in our general insurance policies. Like all policies, war and allied risks are not covered. Yes, these are again some add-on covers. Cumulative bonus 5%, maximum up to 50%. What is cumulative bonus? Cumulative bonus is for every
No claim bonus.
renewal, for every claim-free renewal, 5% of the sum insured is enhanced. 5% of the sum insured is increased per year. And what is the maximum percentage that we can allow? It is 50%. The carriage of dead body in case of accidental death, it is 2% of capital sum insured or rupees 2,500, whichever is less. Education fund for one dependent child below 25 years, there are certain percentage which are there prescribed. For more than one dependent, again the percentage is given along with the maximum amount. The benefit is available for only on capital sum insured and not on cumulative bonus. So whenever it is written CSI, what is CSI? It is capital sum insured. Capital sum insured is the sum insured which is not inclusive of the cumulative bonus. So, for example, if that insured person, when we have given the example of 1 lakh of sum insured, and after 3 years, 3 claim-free years, what will be his sum insured of the policy? 1 lakh as a capital sum insured and 15% as cumulative bonus. So, what will be his total sum insured? It is 1 lakh plus 15,000. But when these benefits are taken into account, then these benefits are available only on capital sum insured. So on only capital sum insured, these benefits are allowed. So from 1 lakh, it will go to 1 lakh 5,000, it will go to 1 lakh 10,000 and maximum up to 1 lakh 50,000. You should not jumble yourself that after 1 lakh 5,000, the next year onwards, for the increase of 5%, it will be on 1 lakh 5,000. No, it will be on the capital sum insured. That is the basic sum insured of 1 lakh. So this is a difference regarding capital sum insured. So 5% of cumulative bonus is allowed and maximum percentage allowed is 50%. Exclusions. These are exclusions in personal accident policy. Compensation in respect of death, injury or disablement arising from. Now these are certain exclusions and which are not forming part of the policy and the claim is not payable. So what are those? You all know intentional self-injury, suicide is not covered. There are many thoughts and there are discussions. Life insurance companies are covering suicide after 1 year, 2 year or whatever. We are not covering suicide. Intentional self-injury is not covering. Influence of intoxicating liquor or drug. So whenever any accidental injury death occurs due to influence of intoxicating liquor, then those claims are not payable. Engaging in aviation. Now this is again a different thing. When in earlier slide we have come across, when you are going in any aircraft as a passenger, then you are automatically covered. Your personal accident policy is taking care of any accidental injury. But when that insured person is engaged in aviation duties, what are those aviation duties? He may be a flight purser, he may be running that particular aircraft, he may be a captain of that aircraft, or whatever duties, then in those cases that is not covered. For only passengers, this personal accident policy is covered. So this is the difference between engaging in aviation and when you are passenger in aircraft. Any breach of law with criminal intent, yes, the technical breaches of law are not excluded. These are very important. This is very important exclusion for us to understand, because many a times it happens that the criminal intent will not be there from the insured person, but there may be a breach of law. How that breach of law will arise without criminal intent? I'm giving always a classic example that in Mumbai or nearby areas, when you are commuting through local for reaching to office or your duties, generally you have to abide the rule of or law of crossing over the rails by that foot over bridge. But due to rush hours, or maybe due to you are in a hurry, you are crossing the lines without that foot over bridge. So if accident occurs while crossing the rails, if the accident occurs, you are not having any intention of criminal thing. You don't have any criminal intention, but for reaching office in a hurry, you are just crossing the rail to catch the train. So in that case, what will be the fate of that claim, particular personal accident claim? As per our exclusion, the breach of law with criminal intent is not covered. It is specifically mentioned. So technical breaches of law are not excluded. So this is a technical breach of law, but there is the substantial reason, the substantial evidence is to be produced by that particular insured person that he was not engaged in any of the criminal activities and there was no criminal intention. Then in that case, yes, these accidental claims are payable. So many of the time traffic offenses, I have already elaborated there. Traffic offenses, if due to traffic offense, if that particular you're driving a bike or maybe a car and the signal, you missed out that signal and you dash your car to some other vehicle, or maybe accident occurs and any injury occurred. In that case, what will happen? Yes, if the traffic offenses are not due to any criminal intention, those are also payable. But yes, for arriving at the claim settlement time, the insured person has to substantiate the evidence that the criminal intention was not there. So there has to be certain points which insurer has to satisfy, and then only these type of claims are payable. Service in armed forces, yes, the persons who are engaged in armed forces, we are not issuing personal accident policies. War and nuclear perils, I have already elaborated this point. From childbirth or pregnancy. So personal accident death due to childbirth or pregnancy, it is not an accident and hence it is not covered. Many a times there was a debate always in social media about heart attack, whether those heart attacks are accident, those are sudden, those are that those are must be treated as accident, but still those accidents are heart attacks are not termed as accident. Likewise, childbirth or pregnancy are not accident and hence those are excluded. So these are exclusions under personal accident policy. Now the classification of risk. Classification of risk are categorized as per their working, that is the duties of working. Like risk group 1 is a very lower risk of the person wherein they are engaged in general administrative function. So the risk of accident to this risk group 1 is very minimal, is very low. Like I have elaborated you the persons like accountants, doctors, lawyers, architects, teachers, because these are the persons who are in administrative function. The risk of accident to this person is very low. So these are classified under risk group 1. Their percentage of premium, that is the rating part, is very lower as compared to risk group 2 and risk group 3. So then what are risk group 2 and risk group 3? Risk group 2 is higher risk group than risk group 1, but lower risk group than risk group 3. So what is risk group 2? Risk group 2 are generally the person who are engaged in manual labor. So those are maybe contractors, builders, the shopkeepers, drivers, veterinary doctors, the professional athletes, sportsmen, machinists, like those. So these are the persons who are engaged in manual labor. In our earlier risk group 1, the persons who are engaged in administrative functions, those are treated under risk group 1. In risk group 2, the persons who are engaged in manual labor. And what is risk group 3? Risk group 3 are the most hazardous risk group, or you may term it as the risk is very much higher for these persons for any of the accident. Like the terminology or nomenclature says, jockeys or circus personnel, the persons who are working in mines with explosives, mountaineering, winter sports, persons engaged in activities of similar hazard. So these are the person who are the professional ones, and those are prone to accident in a very large capacity as compared to risk group 2 and risk group 1. So what is the lower risk group? It is risk group 1, so the premium is lower. The hazardous risk group is risk group 3, the premium is more. This is simple to understand. Now, things to remember regarding personal accident policy: certain age limit, 5 years to 70 years. Beyond 70 years also we can issue the policy subject to certain approvals from the competent authorities. There are 3 major risk group: risk group 1, risk group 2, risk group 3. The rating factor depends upon the risk group. What is capital sum insured? I have already conveyed to you. Permanent total disablement, permanent partial disablement, temporary total disablement. So these are some of the abbreviations which you all need to understand. Accident, yes, accident is external, violent, and visible means. Not only external, violent, and visible, but these are solely and directly. So the direct cause, or in our insurance principle, the proximate cause should be accident. Then only these claims are payable. Again, personal accident policy is fixed benefit policy. Yes, this is not a strict indemnity policy, because you are giving this policy to the person according to their remuneration, maybe monthly salary, maybe their annual income, and according to that the sum insured is arrived. So these are not the strict contracts of indemnity, but these are the fixed benefit policy. Now, what is fixed? Fixed is the sum insured. Sum insured is fixed according to their remuneration, and those benefits are according to their remuneration. We are fixing at the time of inception. Once you give this policy to a particular person, so while assessing or while issuing the policy, you are taking 3 years the IT return from if the businessman is there, or maybe the salary slip from 16A from that insured person, to ascertain that whatever policy you are issuing to insured person is correct one. Because since these are not policies of indemnity, when a claim arises, you have to pay that compensation, or whatever sum insured you have accepted, you have to pay back to that particular insured person. So here you have to be careful while issuing the policy. This is again worldwide cover. Yes, worldwide cover, that too for 24 hours. In personal accident policy, what we understand was of individual personal accident policy. Can we issue group personal accident policy? Yes, we can issue group personal accident policy, but there has to be some common relationship the group has to be homogeneous group. What is homogeneous group? Homogeneous group means there has to be a common relation. What are those relations? There may be a factory, there may be a manufacturer, and all the workers, labor, or whatever staff, those are working in that particular factory. The relationship is a common relationship, or we may call it as a homogeneous relationship. So we can issue group personal accident policy, but if a group is formed, like there are certain club, maybe a kitty party club, or maybe some clubs which are not having any homogeneous relationship, in that case these group personal accident policies cannot be issued. These are certain cumulative bonus, education grant is not payable, medical expenses and other benefits that can be given as add-on covers. Again, in group personal accident policy, this premium is dependent on the profession activity involved in. So there may be difference in a particular group personal accident policy for the risk groups. How that risk groups can be arrived? In a factory, the persons who are engaged in administrative functions can be termed as risk group 1. And for the manual labors, the risk group 2 will attract the premium rate, because there will not be a single rate for a particular factory personals. That those will be as per their activities involved. There will be bifurcation according to the profession of duties which they are delivering in that particular factory. So, and accordingly the rates may be different in the same policy, in the same group personal accident policy. Now, when we have studied already that this policy is 24 hours and that too worldwide. In group personal accident policy, can they cover it for on-duty covers or for off-duty covers? Yes, they can. How this coverage will happen? For on-duty covers, the coverages are restricted for the persons whilst on duty only. So like in a factory, if there are shifts, or if their working pattern is from 10 to 6, so after coming in that particular factory and before leaving from the factory, the personal accident coverage is available to that particular insured person. So this is available whilst on duty. The appropriate 75% of the applicable premium is to taken into account. What are off-duty covers? It may happen that the manufacturer or the factory owner may take a policy for off-duty cover. What are off-duty covers? After leaving the particular manufacturer's premises or the factory and before coming to the factory, those are called as off-duty covers. So in case of any accident whilst the person is not on duty, those will be covered, or those coverages will be available if they have chosen off-duty cover, and 50% of applicable premium is taken into account. Exclusion of death cover. Yes, this is also a benefit which can be offered for lowering of the premium when allowed, when group life policy exists. Suppose that factory owner or manufacturer is having already the group saving linked insurance policy, maybe life insurance policies, term insurance policies. All these policies, if they are already having with them, then they can opt for a group personal accident policy with exclusion of death cover. Why? Because of for the lowering of the premium. The risk for the insurance company will be very less, because in case of death coverages, the maximum amount of compensation is payable. So here, when they are opting for any exclusion of death cover, the premium will be lowered. The group discount, yes, if more than 100 persons are covered, the group discount as per the number of persons, it may vary. Any physical infirmity or defect, disability prior to the commencement of cover, they have to convey to that the particular insurer that there are certain defects or anomalies, infirmity, physical infirmity, and then accordingly the cover will be available. Or any cumulative effect as a result of such disability stands excluded. So this is very important. after the group personal accident policy, now flight insurance coupons. What we need, what we know by this flight insurance coupon, I will just elaborate you with a very short elaboration. Passenger flight coupon provides cover for accidental bodily injury while embarking or disembarking and disembarking from or traveling in any aircraft operated by a regular airline over a scheduled route as a passenger during the flight specified. So the flight insurance coupon, the flight operators, maybe the flight manufacturers, they are taking these type of flight insurance coupon. So this is for the accidental bodily injury while embarking, disembarking from or traveling in any aircraft operated by a regular airline over a scheduled route as a passenger. So for those passengers, these airlines are taking this flight insurance coupon. So this particular coverage may be for a specific route, maybe for a specific period. Suppose from Mumbai to London, there is a flight. So for that particular flight or for that particular specific period from Mumbai to London, they can have this type of flight insurance coupon. Maybe they airlines can take a specific period of time, maybe 6 months. In a monsoon season, they may not be operative. So in that case, whether they have to take it for a whole yearly period, no. They will say that for a specific period, we want these flight insurance coupon. So those can be available. Declaration policies also can be issued to individuals or companies for frequent flyers. So there are many frequent flyers who are flying across the country. So for them also, certain policies are issued which are cheaper policies or cheaper rates are given because these are the frequent flyers, and many a times those insurance coverages are given to them. And this is again a very good example of insurance add-on cover to these persons who are embarking and disembarking from that particular aircraft. So these are generally taken by those airline and those aircraft owners for the passengers. Student safety insurance, this is again a part of personal accident policy only. You might have come across many circulars that student safety insurance are to be taken on the lines of personal accident, because this is nothing but the accidental benefit policy, but this is given to students only. So these are available to schools, colleges, and other educational institutes. Benefits are given to the registered students only. So the students have to be registered from that particular educational institution. It may happen that a particular school under that educational institution may take a policy, or maybe the educational institution as a whole may take also the policy, where the number of schools may be scattered across the country or maybe across the state. So in both the cases, we can issue the policy. The main criteria, the important thing to note is that those students has to be the registered students of that particular educational institution. All students are to be covered. This is very important. There will not be any bifurcation, any segregation that they want to cover the students from say 8th standard to 10th standard only, or maybe from 1st standard to 4th standard as the risk is more. So is there any approval for these type of bifurcation? No. All the students are to be covered. The additions are allowed, but deletions are not. Why the deletions are not allowed? It may happen that a particular student may be going away from that particular school after say 6 months. Still, the deletions are not allowed. If the deletion is also made in the policy, refunds are not allowed. So this is very important in case of student safety insurance. Additions are allowed. Yes, the additions may occur after say 6 months. There are certain services after transfer of those particular persons. They want their kids to be engaged in that particular school and they want to take the admission, in that case those additions are allowed. The deletions are not allowed. If we are deleting students also, the refunds are not allowed. So this is also a very important thing to note from student safety point of view. Again, these are also on the lines of personal accident policy. So these deletions, when these are strictly not allowed, then on the merits of the case, those can be decided again to the competent authority. Maintenance of attendance register. See, this is one of the important or keynote to, for any of the student safety insurance and also in your examination point of view. The registered student is the key factor. Also, attendance registered nowadays, this maintain attendance registered is maintained digitally, so there is no need to worry about this. Previous years, these are very important factors because the attendance registers are very important. If that particular student is there in engaged in that particular school, or he has attended the school or not, so these are the certain parameters to ascertain at the time of claim settlement. So maintenance of attendance register and attendance registers are very important. Claim amount payable to the parent guardian as recorded in the school register policy. That is the claim amount which are payable in case of death or any of the injury are payable to the parent or guardian. So these are the policies issued in the name of educational institution, because though the policy is issued in the case of educational institution, the amount of claim amount is payable to the parent or guardian as recorded in the school register. So the institution may ask you for the claim, but still those can be payable to the parents and guardian, because educational institution is the primary member or maybe the prospect of our policy, and the insured persons are the students. What are the compensation limit? These are very old limits. These are now very much enhanced to 1 lakh, 2 lakh, and like that. So those were our personal accident policies, different policies of personal accident, group personal accident, flight insurance coupon, the student safety. These are all on the lines of personal accident policy. Now we'll deal with burglary policy. Since miscellaneous insurance is very vast subject, we are since we are running short of time, we will try to get maximum policies at a stage. Now, burglary business premises policy. The nomenclature itself shows that this burglary policy is for the business premises, and this is not for any of the house owners. Burglary is defined as, again, the definition is important. Burglary is nothing but theft. It is theft of the property from the premises, which is described in the schedule, following upon felonious entry of the said premises by violent and forcible means. Here again, the violent nature is involved and also the forcible means are involved. So whenever there is any burglary that is due to forcible mean, violent mean, then only that burglary or theft of the property is termed as burglary. Theft by a person in the premises who subsequently breaks out by violent and forcible means, provided there shall be visible marks at the place of such entry or exit by tools, explosives, electricity or chemical. So here the definitions of burglary are elaborated. So any breakage of the windows or the doors by forcible means are established that the burglary has occurred. The use of force and violence need not be against property only, it can be against any individual also. So what is the terminology used here? So the force and violence cannot be seen forcibly on the doors, maybe on the windows. But if the gunman came into that business premises and with the gun or pistol, if he is giving threat to particular individual and enters the business premises, can it be termed as burglary? Yes, that is also termed as burglary, because the entry is violent, the entry is forcible. He is not a customer on that particular premises, but he has come as a customer, but then after that he has with the help of violence and forcible means, he is tried to get the custody of whatever is the property of that particular business owner. So this is again a forcible entry. So burglary can be termed there also. This policy covers what this policy covers. This policy covers contents of business premises against the risk of loss or damage by burglary and housebreaking policy. So whatever is the property, the stock, the furniture, or whatever is there due to burglary, if there is a loss, that can be covered under burglary policy. Fire risk is covered by issue of a separate policy. So here in case of burglary, a fire policy is must. We are issuing burglary policy to those who whom we are giving a fire policy. The property insured is covered only if loss or damage takes place whilst contained in the premises described in the schedule. What do you mean by this? The property insured is covered as per the schedule of the policy. The location is very important in case of burglary policy, like it was there in fire policy. You all know the location is a address which may not be the registered address of that particular business owner. So the registered address or the office address may be different, whereas a particular manufacturer or particular trader's address may be different. So the location address is very important, and the properties which are insured in that particular location address, if those are lost due to burglary, those are covered. What are the properties which are covered? As I told you, those are stock in trade, goods in trust or on commission for which the insured is responsible, cash, currencies which are locked in safe, fixture, fittings, tools of trade, loss or damage to any part of the building caused by burglary or any attempt, therefore it is also covered. So these are certain properties which are covered under burglary policy. For stock in trade, I need not elaborate. These are the stocks which are there in the trading activity. What are the goods in trust or on commission for which the insured is responsible? Those are the goods which are not owned by that businessman, but these are the goods which are held in trust and or on commission. Like a simple example, when you are giving your clothes to a tailor for stitching, those clothes are not belonging to the tailor, those belonging to us, but we are giving to the tailor for stitching. So those are the goods which are held in trust by that particular tailor. So in case of any burglary occurred in that particular business premises, whether those clothes are covered, yes, those are covered, subject to that particular tailor has to give a separate amount of goods held in trust and or commission in our particular policy. There has to be amount mentioned against column of goods held in trust and or commission. So this is a simple example which I have elaborated. Cash, currencies, are they covered under burglary policy? Yes, those are covered under burglary policy, provided those are kept in safe. So if those cash and currencies are kept in drawer or at counter, those are not covered. So those properties or those cash and currencies are not covered. Those have to be in locked safe. So, and again, the definition of safe is also important. Safe, there are certain dimensions. There is, the safe may be of, it is a metal safe. There may be certain security measures for that safe. Nowadays, the safes are very much strong, digitally locked. So these cash and currencies cannot be stolen, or there will not be any burglary. But if those are not locked in safe, those are not covered. Hello. Fixtures and fittings, tools of trade, those are also properties which are to be covered. Loss or damage to any part of the building caused by burglary or any attempt, therefore, is also covered. I will like to give you some points on this particular aspect, because generally at the time of issuing burglary policy, many of us, including the marketing persons, are not covering the building part. Why they are not covering the building part? Because there cannot be burglary to building. It is correct also. There cannot be burglary to building. But suppose if there is damage to the building, if there is any damage to the building or any part is damaged of that particular building whilst burglary, then what will happen to the claim in case of burglary? So if that building is covered, if that building is covered under burglary policy, any loss or damage to any part of the building, it is covered under this burglary policy. So provided that particular businessman or that entrepreneur has to cover this building sum insured under burglary policy. When we were discussing about burglary and theft, maybe larceny, maybe dacoity, so there are certain sections of this burglary as per Indian Penal Code. Those are housebreaking, section 445, theft, section 378, robbery, section 390, dacoity, section 391, burglary, hold up. So these are all part of burglary only. So as per the number of persons, maybe if the number of persons doing burglary are more than 4 or 5, that is termed as dacoity. If those are less than 4 or 5, those may be termed as robbery. So as per IPC, Indian Penal Code, these definitions are changed. I have elaborated certain points: theft, burglary, what do you mean by robbery? So these are elaborated in our PPT. Housebreaking, dacoity, larceny. Larceny, we are not covering larceny. These are the theft accompanied by a person who has got a right to be in the premises. What is larceny and what is theft? Theft is part of burglary only, but larceny is that particular customer, when he is coming to a particular shop or maybe that business premises, and he has certainly done the larceny without knowledge of that particular insured person, then in that case it is a theft only, but it is the negligence of that particular shop owner or maybe that businessman, and due to which that theft has occurred. So here any forcible entry, any violent visible means of forcible entry doesn't occur, and hence the larceny are not covered. Key clause: loss of cash from the safe following the use of the key to the said safe or any duplicate thereof belonging to the insured is not covered unless such key has been obtained by violence or threat or through means of force. So what is key clause? First of all, key clause is that by the operation of any key, if the cash is stolen, whether it is covered under our burglary policy. Yes, there is a key clause, but if these keys are obtained by the force, if these keys are obtained by the force from that particular owner or that insured person, and then those are used, that particular clause covers that loss of cash. But there has to be certain or some violence or forcible means of taking of that particular key. So it may happen that that force of violence or maybe that force of forcible use of violence has taken place, and that those keys are obtained by that robber or maybe that thief, and then those cash is lost, then that is covered. But this key clause, unless and until the keys are obtained by the force, if due to any negligence, if the keys are lost by that particular insured, and by use of duplicate key, that those persons are very smart, they can take the impression of those keys, and with the help of duplicate keys they can operate and take that particular cash. So there is a loss to that cash, but still it is not covered because those keys are not obtained by violence or threat. And if that is not established, we cannot cover loss of cash under this key clause. The key clause cannot be deleted even by payment of extra premium. So this key clause is operative in the policy, and one cannot delete it by even payment of extra premium, because they tend to come to you to delete this key clause, because those businessmen are tend to, or maybe due to negligence, they may lose their key. So still, if by payment of any additional premium also, we cannot delete this key clause. In key clause, yes, the complete record of cash kept in the safe should be kept secured in some place other than the safe. These are certain clauses which are old one, because nowadays due to digitization, all the records are there in a single pen drive or something. So these are, but this is a definitely important point to note, that that particular businessman or our insured cannot say that I don't have record now, and now you have to ascertain the loss and you pay me whatever sum insured I have given to you. No, there has to be the record, and the insured, the onus of proof is relying on the insured. The insured has to substantiate his loss and then submit his claim bill. So this is regarding key clause. The keys of the safe or strong room shall not be left on the premises after business hour. This is also one of the condition regarding key clause, that whatever are the keys of the strong room or the safe are to be taken along with that insured person, or maybe his managers, or whoever are the designated person, and those are keys are not to be kept in the premises after business hour. Why this condition or why this clause is very important? Because if there is any forcible entry in the premises, and whilst operating this burglary, they may get these keys if those are kept in the drawers or in the business premises. So along with the burglary, the loss of cash will easily happen. So in this case, the negligence or due to this clause, the loss of cash is not covered. So this is very important regarding key clause under burglary policy. Property excluded, what are those properties which are not covered under our burglary policy? Gold, silver articles, watches, jewelry, precious stones, deed, bonds, bill of exchange, checks, and see these are certain items which are at a very short space, or within a very short space, these can be stored, these can be easily lifted, these can be easily stolen. These are a high valued item. So unless and until specifically mentioned, these are generally we are excluding, we are not covering. But if specifically mentioned, and if we insurer has given approval for coverages of the same, we can give this. But generally these properties are excluded. Documents of any kinds, manuscripts, medals, coins, because these does not have any of the physical value, so those are not covered. Motor vehicles, accessories, livestock, those are not properties to be covered under burglary policy. What we understand, what are the properties which are covered under burglary policy? Basically those are the stocks, the furniture, maybe your building part or building you can cover, and along with that cash can also be covered. Perils covered, yes, you all know, burglary or housebreaking of property following upon felonious entry. So this entry or exit, both what entry, you all know, the forcible entry, it may happen that while coming, they are breaking those doors or windows, that is a forcible entry. But what is forcible exit? It may happen that a particular customer comes in that entrepreneur's premises as a customer. He may hide himself in maybe in some of the small area, maybe in toilets, or maybe somewhere where that businessman or their persons cannot locate that particular person. So while after closing of business hours, that insured person is unaware that that thief is already there in his premises. So after looting, after doing the burglary, he may use the force, or he is using the force for breaking of the door and the window, and he run away with the property. So in that case, the entry is not forcible, but the exit is forcible. So the violent and forcible means are there. So these are also covered under our burglary policy. So theft by a person in the premises who subsequently breaks out by violent and forcible means, damage to the premises by the burglars failing to be made good by the insured. So these are certain perils which are covered under our burglary policy. Exclusion, loss or damage where any inmate or insured's family member or business staff is involved as principal or accessory. That means if the insured himself or insured's family member or the business staff is involved, so this is hand in gloves with that particular thief. If burglary occurs and if it is established, then those claims are not payable. By acts of persons lawfully on the premises. Lawfully on the premises, I have already explained you that the customers who are entering in the premises, those are the lawfully permitted person. And if they took out some stock or some parts from that particular business premises, those are termed as larceny, and that is not covered under our burglary policy. Consequent upon fire or explosion. So if there is any loss due to burglary after fire or explosion, those are not covered under burglary policy. So the proximate cause has to be burglary only. After fire or after explosion, if burglary took place, whether it is covered, no. Under burglary policy, it is not covered. Then that will be covered in which policy? In fire separate policy, that may be covered. So that is again a section under fire policy. Loss of cash from the safe following the use of key or duplicate, that is also I have explained, it is called key clause, and this key clause cannot be deleted by payment of extra premium. This is to note from examination point of view. Earthquake, natural perils, strike, riot, civil commotion, so these are not covered, that is those are excluded from burglary, but by payment of additional premium, yes, we can cover the same. War and allied perils, nuclear risk, those are not covered. Premises left uninhabited by day and night for 7 or more consecutive days and nights. These are this is also important point in case of exclusion. If the premises are closed for 7 or more consecutive days and nights, then, and if the burglary occur, what will be the fate of the claim? So in this case, if the premises is going to be closed for certain period of time, maybe 7 days or more than 7 days, the insured person has to inform the insurer, the insurance company, by in writing, saying that due to these things, we are non-operative for certain period. So kindly note the same and pass the necessary endorsement. This is required because there is a more risk of burglary in these premises when they are locked for more number of days. The persons who are nearby, maybe these wrongful person, they are having key observations on those particular premises, and the chances of burglary is in a large capacity. So in case of these type of thing, like it did happen in our COVID pandemic period, the burglary, there was the offices or whatever are the premises, those are closed for number of days. But since it was pandemic, nothing sort of those has occurred. But still, for certain number of days, if the premises are left uninhabited, those are closed for maybe 7 or more consecutive days and nights, then the insurers should be informed by the insured person that due to these reasons we are closed for certain number of days. Then after passing of the endorsement, that can be covered. Or if it is not informed and if the burglary happen Under our exclusion clause, we are not paying such type of claim. What are the conditions? Indemnity, yes, these are the policies of indemnity. Extent of intrinsic value of property lost subject to sum insured. Repair damage to property or premises insured. Conditions of pro rata average. What is condition of pro rata average? General common term is under insurance. So like fire, in case of burglary, yes, there is under insurance. So it is the duty of the insured to take the adequate sum insured for the property. Subrogation, contribution, these are the clauses as per our principle of insurance. Those are attached to and forming part of the policy. Subrogation, yes, the right of recovery in case of any loss, the right of recovery once the claim is paid, the right of recovery is with the insurer. In case of contribution, if there are more than one policy, then the claim is payable to the proportion of that contribution. Fraudulent claim, yes, fraudulent claims are not covered. It is termed as fraudulent claim. Arbitration and disclaimer. What is arbitration? The claim is admissible, but the quantum, the amount of claim payable is in dispute. Then the arbitration principle comes in picture. The arbitrators are appointed to ascertain the amount. So this is called as arbitration. Here we should know that arbitration is related to the amount. It is the quantum. The claim is payable. Yes, the claim is admissible by the company. The dispute is in between the quantum, that is the amount. So in that case, the arbitration comes in picture. Cancellation from insured side is on short period basis. If the policy is cancelled from the insurer, it is on pro rata basis. The short period scales are also defined for miscellaneous type of policies. Reinstatement of sum insured, yes, reinstatement like in our fire policy. In case of burglary policy also, the reinstatement of sum insured is there. Immediately upon the happening of any loss, this sum insured can be reinstated by paying the premium. So this is again the same reinstatement clause like our fire insurance policy. Since these burglary policies are indemnity policy, there is reinstatement of sum insured. Special features already conveyed you. Average clause is there under insurance clause. Insurance must be effected for the full value of the property unless first loss basis is underwritten. So there are certain policies under burglary like the first loss policies. So apart from the first loss policies, the since there is under insurance, the full value of property is to be taken as sum insured. The probable highest amount at risk at any one time should be declared. See, the sum insured can be taken as the highest amount of stock at any one point, or the average of the stock in a whole of the 12 months. So this is for arriving at the adequate sum insured and to avoid the under insurance. Rating part is non-tariff. Now we are in non-tariff regime only. So this is a non-tariff business from since years. Premium rates, these are dependent upon the client, situation of the risk, property to be covered, precautions for protection, previous claim experience. This rating part is very important since it is a non-tariff business. Now, how you are going to give the rates for two different insured person, because those premium rates depend upon the client. So what is client? Client means are those clients on our books since years, whether they are giving us any other type of insurance policies, what is their claim experience, what are the amount of premium given by that particular client, what is their moral hazard. Those are the things which you need to understand while issuing premium part and the rating to a particular customer. If the clients are on our books, those are very good in claim experience, then our rates are lower. If the clients are on our books and still if their ICR or incurred claim ratio is more, the rates will be more. Then the rating part depends upon the situation of the risk. What is situation of the risk? Situation of the risk, there are two aspects which we need to understand. If that particular business premises is in a remote area, where it is not surrounded by closely factories, maybe other business premises, then the chances of burglary is more. So the premises which are in remote area, the chances of burglary is more, so the premium is on the higher side. Whereas if the situation of risk is within a city or maybe in the residential area, densely populated area, in that case the premium part is on the lower side. Property to be covered, then here also if the property is it is a high risk or high value property, and the area requires for the proper property required is very much of the lower side, then the risk of burglary is more. Whereas in case of large machineries, maybe machineries, if the stock is of cloth and those cloths are in very large number, big capacity, so the chances of burglary is very much minimal or lower as compared to the high value products or high value properties which are stored at a very lower space. So these are the rating depending upon the property to be covered. Precautions for protections, yes, if 24 hours CCTV is provided, there is a burglar proof alarm which is connected with the nearby police station authority, 24 hours watchman or security guard, class A construction is a compulsory thing. So if these are if the protection adequate measures are taken by that insured person, then the rating part is lower. We can give a rate which is as compared to the other rating, it will be on the lower side. But if these protection facilities are not there, you may decline the proposal and you may ask for the particular protection systems to be installed, and then only you can cover. If you want to give the cover, then also the rating part will be on the higher side. Previous claims experience, yes, for ascertaining the various situation, the property, the precautions taken, as well as this previous claim experience is very important. If habitual experience of claims are coming regularly, you may decline those proposals because this previous claim experience shows the moral hazard of the particular insured. So in case of burglary or jeweler's block, money insurance, whenever the monetary things are coming in picture, the moral hazard is very important for the customer, and for insurance company also, they have to take into account this moral hazard. Higher or lower rates may be charged and protective measures imposed if felt necessary considering the hazard involved. This is already conveyed to you. I have already conveyed you for stocks which are stored in bulk with large sum insured, the chances of burglary is less, so the rates are reduced. Increase rate where chances of major loss in single instance, like I already elaborated, the high value items which may be lost at a single incident, the claim amount will be in large capacity. So in that case, the rates are to be increased. Cash valuables in burglar proof safe, yes, those are to be kept in burglar proof safe. If the safe is burglar proof, then the rating part will be having some discount. First loss basis, 90% to 50%, that will come across what is first loss, what are the percentages, because in burglary this is a very important policy, first loss policy, because generally the businessman, the insured person, tend to have this first loss policy instead of taking the whole of the sum insured, because the chances of total loss is remote. So in that case, first loss policy will come in picture. Declaration policy, yes, declaration policy. Now the minimum retention of 35%, now it is 50%. So minimum retention is 50% at expiry as per fire tariff. That will come across. Underwriting consideration, it is already conveyed to you. Moral hazard, survey of the risk, maintaining of books, regular stock taking. So all these separate sum insured for goods held in trust, stock and cash. These are underwriting consideration. Details of safe, weight, size, make, if the proposal for cash in safe is involved. Separate fire insurance is a must, that we already discussed. Cover restricted to cash money in safe and not in steel almari or cash box. So generally a PT cash box where the cash is kept after the business hour, those are not covered, and these are underwriting consideration. So those have to be kept in safe after business hours. All endorsement warranties are to be attached. Types of policies, full value policy, already we have discussed. Non-declaration policy or declaration policy. So in full value policy, there is a simple burglary policy and there is a declaration policy. So both the policies, whenever we are issuing, the average clause is there. First loss policies, yes, the first loss policies are the policies which may be issued for an amount less than the total value of the property. So these are not the amount of policies which are for the whole of the sum insured, but certain percentage is taken as a part of insurance policy, that is a sum insured, and likewise the premium payable is also in that percentages. Now, what is first loss policy? So first loss policy acceptance should be considered in case of large warehouse and where the stock is very considerable and substantial and bulky in nature. So normally not less than rupees 10 lakhs, you don't go by the amount, but generally those stocks are very large and substantial, bulky in nature. So in that case, the total loss is a remote possibility. So in that case, first loss policy is issued. Built goods, machinery, etc. damage to the premises must be excluded in such policy. This is a first loss. Now here are the percentage. Rate, these are the rates applicable to be charged as percentage of full value premium. Now what is percentage of full value cover and what is the percentage of premium to be charged? See, these first loss policies are applicable for stocks only. These are applicable for stocks. So what are the percentages? Say for example, a particular insured comes to you with they require a coverage of 25% of the full value cover. If the sum insured in that particular premises, a total sum insured, say for example, is 1 crore, then the insured is sure that whole 1 crore cannot be stolen or there will not be burglary for whole of the 1 crore. So he will come to you, he will propose you for 25% of the full value cover. Then what will be the sum insured or what will be the liability of insurance company? It will be 25 lakhs only. Though the coverage or the sum insured in that premises as a whole is 1 crore, what will be the sum insured under our policy? It is 25% of full value cover. So our sum insured will be 25 lakhs. Then what will be the benefit to that insured person? The benefit is that the amount of premium payable will be 50% of what the premium he will be paying on the full value. Say for example, on 1 crore, the rate is, the premium is 10,000 rupees. In case of first loss policy, that is for 25 lakhs, he is covering for 25% of the full value cover. Then what will be the premium payable? It is 5,000 rupees. Understood? This is important point. The percentage of premium should be charged. The premium rating will be on the whole, the full value, and the percentage will be 50% of that particular premium. So what will happen? in case of as the sum insured, selected percentage of the sum insured increases, the percentage of charging of the premium on full value also increases. As the risk is increasing, the premium charge is also increasing. So here, when the sum insured is restricted to 25%, the premium will be charged or the discount will be given of 50%. So this is part of rating according to the first loss policy, because the whole of the insured is sure that whole of the 1 crore cannot be stolen. There will not be burglary for whole of the 1 crore. So he is opting for a selected percentage of the full value cover. So as per selection of the percentage for full value cover, the percentage of charging of premium on the full value cover is described. So these are percentage. This is very simple to understand. Declaration policies. Yes, these are declaration policies under burglary policy, wherein the stocks are declared on regular basis. Why there is a need for declaration policies? Yes, it is elaborated. These policies may be considered where large stocks which fluctuate considerably during the year are involved along the same lines as fire declaration policy. See, the stocks are in large capacity and the amounts are fluctuating. Like in Diwali period, the stocks are very much on the higher side. In monsoon period, the stocks are may not be that much capacity as compared to the Diwali or maybe January, February. But in monsoon period, those are very less. So the fluctuation of these stocks, which are in large capacity, if the fluctuations is large, then the insured person will come to you to have this declaration policy. What is the benefit of this declaration policy? That definitely after declaration of all the 12 months, the total average of that particular sum insured is ascertained, and after arriving at the sum insured, there may be refund of the premium. So since that particular insured person is unaware of the stock at any one point, so here the declaration policies is the option for that insured. Probable highest sum insured. So then what is the amount of sum insured at the inception is to be taken by that insured person. It is the probable highest sum insured at any one time during the period is taken as the sum insured of the policy, and 100% premium on the same is to be collected as deposit at full value rate. So here the when we are discussing the example of 1 crore sum insured under burglary policy, the insured person will say that at the time of inception, I have taken 1 crore as the sum insured. He has paid the premium according to 1 crore. In first month, his stock is 90 lakhs. In second month, his stock is maybe 1 crore 10 lakh. In third month, his stock is maybe 1.20. In fourth month, 80 lakh. Like on, if the stocks are fluctuating, and after 12 months, the average of the stock, if it comes to say 1 crore, then he has paid the premium, and that is adequate premium. No need to ask for the premium, no need to refund of the premium. But yes, if the sum insured, average sum insured comes to lesser, then what will happen? It is usually 50% of the provisional policy premium at least to be retained. So here, when we are coming across the example of 1 crore sum insured and premium is say 10,000, what is the retention of premium? Minimum 5,000 is to be retained. If the average of the sum insured comes to 30 lakhs, he will ask for the refund on 70 lakhs. That means he will ask 7,000 rupees to be refunded. But as per our policy clause, we cannot refund 7,000, we will refund 5,000 only, because 50% is to be retained. So the refund is maximum 50% and the retention has to be 50%. So this is example of declaration policy to avoid any of the premiums in large capacity and no refund afterwards. Like in our general burglary policy, the declaration policies are taken by the businessman. See, declaration policies are to be given to those customer or those insured person wherein the stocks are fluctuating. The business, what is their business, how the stocks are fluctuating, they need to elaborate. So accordingly, you have to issue declaration policy. Generally, we are issuing these policies to our valued customer where the moral hazard is very good. Floating policies, like in our fire policy, fire floater, we all know these are floating policies of the cover. We cover goods in more than one location under one sum insured. So if there are 4 locations and the sum insured under each location cannot be ascertained, then in that case the floating policy can be issued. So there may be floater declaration policies also. So the subject matter of insurance has to be identical in all locations. This is very important. The stock which is covered by the insured person, say for example, he is covering his ready-made garments. So for ready-made garments, he is having this floating policy and his stocks are located in Mumbai, Hyderabad, Delhi and Chennai. He may come to you saying that in Chennai, his stock is not ready-made garment, but those are pharmaceutical. Can we cover that? No. The subject matter of insurance has to be identical. He may have a lot of other businesses, maybe 2-3 businesses differently, but then he has to take a separate policy for that. The subject matter of insurance has to be identical in all locations. Then we cannot cover that particular Chennai location, but we can cover that Mumbai, Delhi, Hyderabad location where the ready-made garments or that particular business is there. Policies are issued when separate sum insured is not available. Yes, if the location-wise sum insured is not available, then we can issue such type of floating policy. They are issued only to well-known clients. So this is a key factor. The moral hazard, our important clients, valued clients are to be given these type of policies. Valued policies, these we need not have to elaborate on this. These are agreed valued policies, which in our general burglary policy we are not issuing, because these are issued to paintings, pictures, antiques and all those, and generally we discourage such type of policies. Inventory and valuation clause, this is again a very important clause under burglary policy, because if there is due to some inventory missing items are there, if there is any valuation which is not correct one, so in that case these clause will come in picture. So if at all any items which are missing at the time of taking inventory, they will claim under burglary policy, but those will not be covered. So at the time of checking inventory or taking inventory, if certain loss is established, those are not covered under inventory and valuation clause. Valuation clause is the valuation by the professional valuer is to be taken for adequate sum insured or ascertaining the sum insured. Risks to be avoided. Now, this we have already discussed in our situation, premises, location, then the degree of hazard. So these are certain points elaborated for your examination point of view. Risks situated in the interiors or remote places, these are high risk. Jewelers are high risk. Dealers in precious stones, curious, antiques, watchmakers, goldsmith, silversmith, furriers, money lenders. These are certain risks which are to be avoided. Documents required for claim procedure. FIR is must. Investigation report, we are appointing investigation report. Since subrogation rights are prejudiced, those are with the insurers. Subrogation and contribution principles are important and key factor in burglary policy. Other policies of burglary are burglary private dwelling policy. What we are discussing here is business premises insurance policy. Along with that, a private dwelling, like it is commonly termed as householders policy. If the package policy, when we will come across, it is householders policy, but you can issue a burglary insurance policy. pair and set clause, all risk insurance policy. These are some of the policies which are related to burglary insurance policy. These are some of the policies. What is baggage insurance? Now we'll quickly sum up certain policies in our miscellaneous part. Baggage insurance, try to understand the basic definition and the coverages. These are very important in your examination point of view. Baggage insurance, loss of or damage to personal baggage of insured or baggage in connection with the trade anywhere in India. So here the baggage, as per this photograph also, it should be the accompanied baggage. So these loss or damage which are personal baggages of insured or baggages which are so these are the baggage insurance, and 2% of sum insured under section 1 or rupees 10,000, whichever is less. This is sum insured and percentage of premium anywhere in India. Again, baggage insurance is anywhere in India. Exclusions: routine travel baggage not covered. What is routine travel? Going to office, coming from the office, you are traveling, and whatever are the baggages accompanied by you, not covered. Articles which did not form part of the baggage when the journey commenced unless declared and accepted by the company. To articles of consumable and perishable nature, not covered. These are certain exclusions. Loss of articles like sticks, umbrellas, not covered. Property in use on voyage or journey. What is the property which is used on voyage or journey? You are using the clothes. So those pants, shirts which are there on you, those are not covered. So articles or clothes while being worn or carried out, not covered. Arising from leakage, spilling of liquid, those are not covered. So this is these are other exclusions are also like our all risk policy. So this is baggage, this is accompanied baggage. Baggage must be insured for its full value. Again, full value insurance has to be there, no under insurance, because in the case of under insurance there will be a condition of average, so the claim will be cut down to the proportion. The purpose of policy is to cover baggage that is personal effects whilst on travel. So this cover incepts, when this cover starts, it starts from the time the travel begins, and this cover continues during the stay also at intermediate places and destination, and it ends when the insured returns to its original place or period expires, whichever is earlier. So the condition is that your baggage insurance will start from the start of the journey. It ends at the destination. So intermediate places, like you are going from Mumbai to Delhi, and while going from Mumbai to Delhi, you are having some work, or maybe some work to be done at Indore, or maybe some of the intermediate place, and after that you reach to Delhi. So in those whole of the journey, this baggage insurance will apply. It ends when the insured returns to his original place. So when you are returning from Delhi to Mumbai, and after reaching Mumbai or policy period, whichever expires earlier, the policy will expire or the coverage will expire. Since the cover is valid during the journey, the loss can take place anywhere within the geographical area covered. Hence, it is necessary that notice of claim has to be sent to the nearest office of the company so that the prompt action is possible. Here, in case of any burglary or all risk, maybe money insurance, the immediate intimation of claim is very important. So there is no law, or there is no definition for immediate. Immediate means whenever that insured person comes to know that the occurrence or the loss has occurred, he has to intimate to the insurance company. So this is a definition of immediate. Money insurance, again, this is very important miscellaneous product. Money insurance, what we cover under money insurance, we all know it is loss of money in transit. So whenever there is loss of money in transit while carrying in transit, the loss is covered under money insurance. So this loss in transit by insured or his employees, loss by robbery, theft, hold up whilst in insured premises or strong room. So it may happen that the money are kept in the insured premises or at counter, or maybe after the business hour in the strong room. Those are also covered. Cash, bank draft, currency note, postal order, postage stamps are also covered. Wages, unpaid salaries are covered against burglary provided it is retained in strong room. So here in money insurance, what we are covering, generally we are covering the loss of money whilst in transit. But apart from loss in transit, we are covering loss of money in the business premises while disbursing the salaries, that we have to take add-on cover of disbursement risk. So these are certain coverages which we can offer under money insurance. Section 1 is money in transit, that is between insured premises and bank or specified place. So here the places are to be specified. Unspecified places we are not covering or we are not issuing the policies. The places or the areas are to be specified by that insured person. So in money which is in transit, that can be covered under section 1. Section 2 is money in safe. So money which are locked in safe and normally for 48 hours or 72 hours, those are covered. So two amounts are specified in cash in transit. This is a general term, cash in transit for money insurance. Two amounts which are specified as, one is limit of insurer's liability for any one loss, and second one is the estimate amount in transit during the year. You all are aware of AOA limit, that is any one accident limit, and AOY limit. In general professional indemnity policies, you have come across these terms. So here also two amounts are to be specified. One amount is any one loss or any one accident or any one occurrence limit is to be specified, and the second is AOY or any 1 year, or it is called as estimated amount in transit during the year. Now here again, like our workman's compensation policy, you are well aware of that employees compensation policy, that is adjustable policy. Cash in transit policy is also the adjustment policy. So what is adjustment? The amount of sum insured at the inception is estimated amount. So this amount is estimated amount and it is not the fixed one. After the whole year or after the policy period, the books of accounts are to be submitted and to arrive at the final sum insured. So this is important in case of cash in transit, and for your examination point of view, yes, this is adjustment policy. Declaration policy also can be issued and premium adjusted on renewal. Just now I have elaborated. Insured will have to keep records of all the money transactions that are carried on involving various transits. So this cash in transit record has to be kept very regularly by the insured person. Again, since this is money policy, this is to be given to the valued client only. So for all risk, money, burglary, or whatever are the policies which we are just discussing are to be given for our valued customers. Certain exclusions are elaborated: shortage due to error, omission, loss of money entrusted to any person other than the insured or his authorized employee. So these are certain exclusions which are very important for money insurance. Loss of riot, strike, terrorist activities, these are not covered, but by payment of extra premium, yes, those are covered. Theft of money from unattended vehicles, yes, this is again a very important exclusion. Though the vehicles are locked and those are the money is kept in that locked vehicle, the particular insured person or maybe his employee has gone to a hotel for having a cup of tea. If loss of money occurred, that is not payable. Extension under policy, yes. Infidelity of employees, infidelity, so fidelity guarantee policies are given to the employees. So infidelity of the employees are covered. Right strike, yes, by paying extra premium, that is covered. Disbursement risk, I already conveyed you. Disbursement risk is while disbursing the salary, wages, or remuneration at the business premises, if the burglary occurs, or if the those thieves or the guns are there along with that, all those person, then in that loss of cash, whether it is covered, yes, if they have taken this disbursement risk. So these are extensions under the policy. Money in safe, money at business counter. So at whilst the money is at counter or till within the business hours are covered, but after business hours, those are to be logged in safe. Fidelity, what is the difference? Fidelity is faithfulness, infidelity is unfaithfulness. This is simple to understand. Certain fidelity guarantee policies are there. Here in case of fidelity guarantee policies, there are three parties which are concerned. Who are the three parties? One, the insurer. Second, the insured. And third, the person whose fidelity is being guaranteed upon. The insured is taking a fidelity guarantee policy of his employee. So the employee is not our direct insured, but our insured is that business entrepreneur, and the person whose infidelity is in question is covered under fidelity guarantee. Direct pecuniary loss sustained due to fraud. So what we cover under fidelity guarantee? We cover the fraud, dishonesty committed by the employee during the uninterrupted continuance of the employment. So the person has to be in service, and at the time of loss he has to be in service, as well as when it is discovered he has to be in service. So this is very important in case of fidelity guarantee. Limit of compensation is the specified sum insured. So according to the employee, according to the risk of infidelity, the businessman is taking the specified sum insured according to their position, according to their nature of work. Loss due to bad accountancy is not covered, as also omission. The omissions, the inventory loss, or certain type of these things are not covered under fidelity guarantee. Act should be committed in course of duty. So these acts are to be committed in the course of duties only. On duty, the person has to be on duty. This is important. What is the time limit or period of discovery? It is 12 months, but what do you mean by 12 months? The customary time limit provided is that the act, whatever the infidelity or dishonesty done by that particular employee, is to be discovered not later than 12 months. See here, this is very important. The dishonesty is to be discovered, or the fraud is to be discovered not later than 12 months after the resignation, dismissal, retirement, or death of the employee, or not later than 12 months after the termination of the policy, whichever be the earlier. So this is a important period of discovery. There will not be any unlimited period. There has to be period of discovery which is limited to 12 months after the designation, dismissal, retirement, or death of the employee, or not later than 12 months after the termination of the policy, whichever be the earlier. So in between these two, whichever comes earlier, our period of discovery or time limit will be over. This is important in case of frauds under this fidelity guarantee policy. There are certain fidelity guarantee policies. The application of precautions and control measures, the supervision of employee is a key factor. Again, the nature of duties is also very important, because the position, the cashier, the persons who are going to the bank for deposition or withdrawal of the money, these are very high risk in nature, and along with their duties, the insured, our client, should be a valued client. So the moral hazard is very important for this fidelity guarantee policy also. Subrogation after settlement of the claim. Yes, the subrogation rights are, or the rights of recovery is with the insurance company. Contribution pro rata with any other policy. Termination of policy is there. Arbitration. So these are also like our other insurance policies are the important one. There are certain fidelity guarantee policies for your examination point of view. Which are those? These are one simple policy is individual fidelity guarantee. A particular person is covered with his name, with his position. We can cover a simple individual fidelity guarantee. What is collective policy? Collective policy is a group policy which can be taken as a collective policy, where a specific sum insured against each employee is described. So in case of individual as well as collective policy, a specific sum insured against each employee is described on the face of the policy. What is floating policy? Floating policy is like our floater policy. A specified sum of guarantees floated over the whole group. So the claim in respect of one employee will reduce the sum insured unless the original sum insured is reinstated by paying an extra premium. Like for example, 100 employees are to be covered under floating policy, say for example 1 crore as a guaranteed amount. So in case of any loss or fraud of say 5 lakhs of rupees, the sum insured will be reduced to 95 lakh. But after payment of a reinstatement premium, that sum insured will be adequately done at 1 crore. So this is a floating policy. Position policy. In position policy, the positions are described and the names are not described. What are those positions? Those will be the key position like cashier, maybe a sub-staff or maybe manager. So those persons who are engaged in position and there may be transfer within those organizations. So the particular loss by any fraud with that position is attributed, then these policies will come in picture. Blanket policy, a huge organization, say like our company New India Insurance, they may cover the entire staff by blanket policy. To cover whole of the 13,000-14,000 employees, they may cover a blanket policy. No need to give any names or position, but total of the employees are covered without showing the name and position, but only the references are made. What are those references? What is our working structure? How what will be the risk? What are the coverages they require? And accordingly, we can issue this fidelity guarantee for any of the frauds. If it happen, then the insurance coverage will be there. So these are certain policies which we have discussed for today. Tomorrow we'll discuss some other policies, and along with that I would like to give you some brief idea on liability section also, because that is also covering miscellaneous part. So here, thank you for patient listening and all the very best to all of you. We'll conclude today, and again we'll meet tomorrow for the second session of miscellaneous insurance. Thank you very much.
Thank you, sir.
Thank
It
you,
was
sir.
good lecture. Thank you, sir.
Thank you, sir.